All right, all right. Let's get diving in. Good morning, everyone. Hope you're having a good start to the day. Should be a pretty interesting day here. So, as far as the daily squeeze goes with the SPY, everything still looks good. So, nothing's changed on my end. I'm still going to be looking for a move back into new all time highs, anywhere around +2 to +3 ATRs to the upside over the next 1 to 2 weeks. So, I don't think we get a new all time high next week. But with the structure of the squeeze here, that's a move I'm looking for into next week. So everything still checks out there. SPY is looking rock solid. And then the Qs are trying to make a comeback here. And structurally, guys, this looks so much better. So this is kind of, at least what I've been waiting for with the tech stocks and with the semiconductor stocks is give me a couple closes back above the 21. Give me back the stacked moving averages. And now I got a little more confidence that along with the S&P 500, the Qs could be shaping up here to make their own move back towards highs right around +2 ATR. So I think the indexes look really solid here. Volatility is right where it should be, down there it's 21. So that's still the same mindset here. Next 1 to 2 weeks, because of the structure, not because of an opinion, I think we're going to see the markets go back towards brand new all-time highs. So that's going to be the focus. Well, I do think that happens potentially next week or the following week. A little bit of choppiness here this week, so nothing to be concerned about. But what can always be nice when things get a little bit choppy, and keep in mind, the squeeze itself, we're trying to capture chop. We're trying to capture that moment in time when things are chopping to the extent that we're building up energy, getting ready for a directional move. Now, the directional move, once the squeeze releases all that energy, it's where we typically have some fun. Where a lot of traders run into trouble is the buildup of energy phase. And what I found helpful is you're waiting on this, the squeeze to fire. You got a couple long positions. You're waiting on that directional move. In the interim, go on ahead there and throw on the iron condor. So one of the trades we did in the options room yesterday was an iron condor for this Friday's expiration. And on the put side of the condor, let's go check that puppy out. Let's check this puppy out. So you got Friday's expiration, and on the put side of the condor, here's what I typically like to do. If you've got Thinkorswim, over here you're going to see the market maker's expected move. So the expected move for the SPX, from this morning into Friday, is about 40 points up or down. Yesterday afternoon, the expected move into Friday was about $50 up or down. So in plain English, the people who price the options for a living, they're telling you what they expect. They expect into Friday at least 40, $50 to the upside or $50 or so to the downside, which basically means there's a pretty good probability all the put options that are 50 or plus points out the money and all the call options that are 50 plus points out the money, there's a pretty good chance they're going to expire worthless. It's right in line with what the market makers are expecting. So with that being said, expected move into Friday yesterday afternoon was about $50, so we went $60 out the money on the condor. $60 to the downside, $60 to the outside. A little bit further than the expected move. So we get the 41.30 puts, and we went $10 wide, and then we sold calls over here at 42.60. So basically, if you're new to the iron condor, you're doing a call credit spread and a put credit spread. You're basically placing a bet that into Friday, we're going to stay within this range. We're going to stay above 41.30 and then anywhere underneath 42.60. And I like to set these up as little weekly income trades. So, once you've grown your account and you got some sufficient capital, these can be nice trades for a good, 12, 1,500, couple $1,000 a week. So that's the weekly income trade of the iron condor. We got a little bit of premium coming in. Nothing to quite write home about. But that's a weekly income trade, just in case we chop a little bit here. And then as far as the directional trades go, remember we got the SPY squeezing away here. So we're looking for some good upside. And I think the industrials still look rock solid. Here you got a beautiful daily squeeze holding above the 21. You got the stacked DMAs. So in the industrials, a couple good looking charts here. My favorite is Caterpillar. So you can't go wrong with CAT, Triple M, UMP. It's the same setup in the same sector. You're looking for the same move. I just fancy myself a little bit of CAT here. So for CAT, holding structure, daily squeeze looks good. And I'm looking for a move into about 248, which is +2 ATR to the upside. And we're break even here. So I think this is about a, $2,000 to $3,000 trade, not bringing in any premium yet. So the difference here, and as a swing trader, you got to be able to make, to differentiate between a trade that's not working and a trade that's losing structure, or a trade that might not be working immediately, but is still behaving just fine. And Caterpillar falls into the category of a trade that isn't working immediately. We're not immediately getting that move into 248, but as far as the structure goes, there's nothing wrong here at all. It still looks beautiful. So you got to practice that patience. With Cat, would like to see a move here soon. You got a couple of weeks left to expiration. So two different credit spreads, got the 242.5 short strike by 237.5, and then another spread at 235 by 230. So I'm liking Caterpillar. It behaves well, good structure. Daily squeeze fires long for the SPY. You should be looking to see the industrial daily squeeze fire long as well. And then those two things there should be the deal, should seal the deal for Cat to make the move higher. You can look at Triple M. This looks rock solid too. So this is some good stuff. Daily squeeze, we're holding structure. Triple M looks really good. I even think UNP still behaves well. Good structure, good squeeze. So I still like the industrials. I got my piece in Caterpillar. But then for the tech stocks here, like I mentioned, this is what I've been waiting to see from the Qs. And this feels so much like March and April. Back in March and April, you had a clean daily squeeze of the S&P 500, but the Qs and the semiconductors, they were getting beaten down for a little bit. Ultimately, the SPY kept on squeezing. Eventually, the Qs regained a little bit of structure with a positive histogram. They got the stacked EMAs back. They got back above the 21. Then you saw some really good upside across the board. This feels very similar here. So for the Qs, better structure to the daily chart. I think we can get a move here into new highs. The question is, which tech stocks should we focus on? I'm a fan of Google here. So for Google, come on, keyboard. For Google here, we get the position we took in the options room. So June 18th expiration put credit spread. And we're in pretty good shape here thus far. We got short strikes at 22.90, so I'm definitely digging that position. Pretty good open profit here. And for Google, keep in mind, I'm basically looking for the same move every single time I trade. It's the same exact setup. I use the same exact strategy, and I'm looking for the same exact move. So for Google, what do we like about Google? You had a good daily squeeze. You held structure. You had your stacked EMAs, so that makes it a good candidate. And for the big googs here, I'm looking for a move into 2400 plus, call it 2430, which is about 2.5 ATR, but that's what you want to rinse and repeat. Find that structure, build your position near the 21 EMA, hold on tight as long as you're within +1 and -1, and then once the squeeze releases that energy and you get the move into about 2 to 3 plus ATR, you're looking to take profits. It's the same trade we did over here in Google last month, or back in March and April. Daily squeeze, so we take a position at the 21. It's a little bit choppy, but it's just +1, -1 ATR, nothing wrong there. And then you get the beautiful move into 3 plus. So that's what I'm looking for on Google. Personally though, I wouldn't add to Google here. You want to build those positions near the 21. We're not quote unquote extended, but you're not close enough to the 21. You're a little bit close to 2 plus ATR. So the downside here, if you jump into Google this morning, is that it flushes back to the 21. And the upside is that you get a couple more bucks to 2400. So I think for something like a Google, it's got all the potential in the world here, but you want to buy that on a bit of a dip. So I think you wait for the chips and dip on Google. And then my other favorite fear from technology was Facebook. Same structure, same stacked EMAs. You can't get long Facebook right here either though. It's too extended. So should you see a dip either into the end of the week or early next week for the overall market, which should cause a dip for Facebook and Google, I think you want to pick some up as close to the 21 as possible. But there's a potential here that they're just going to keep grinding higher. So I think you think in terms of probabilities, I wouldn't go chasing here. If you miss the move, you miss the move. But for other tech names, you got Apple, and I'm just not a fan of Apple here. So have the understanding that if the S&P 500 fires that squeeze to the upside and then the Qs, they make a move to new highs, it's going to drag everything with it. So you're going to see Google, you're going to see Amazon and Facebook and Apple and Microsoft, all the different tech stocks. They're going to make a move higher, but you want to focus on probabilities and structure. So putting aside the fact that the market looks good and the Qs look better, Apple doesn't have the highest probability setup here. There's no daily squeeze, which right off the bat, I'm not going to trade it. We're under the 21. You got no stacked DMAs. So does Google or Apple? Does Apple go higher if the Qs go higher? 100%, 99%. But there's not a good looking chart here. For Amazon, I'm not the biggest fan of this either. I'm a huge fan of Amazon in a weekly chart because you got a beautiful weekly squeeze, but the daily chart, which is more appropriate if you're looking for a week to 2 weeks of momentum, this isn't my go-to setup. There's no daily squeeze. There's no stacked moving averages. There's going to be no trade for me. And then for Microsoft, I would throw Microsoft into the category of Facebook and Google being the better looking tech stocks. We do have a daily squeeze here. We're back above the 21. You don't have the positively stacked moving averages just yet, but this is a better looking structure. And if the Qs make them move into new highs, I think at the very least, Microsoft is good for a move into about, call it 260, right around plus 2 ATR. So I think you can throw Microsoft into the bunch there, but by far, I think Google and Facebook have the best structures within technology. It's just that if you didn't get the position or the 21, I think you're doing a little bit too much chasing here. So let those go, wait for a pullback. You're always going to get another opportunity. But a few more here. Trade we did on Monday morning, or Monday afternoon in the options room, was GameStop. So admittedly, I'm not the biggest fan of, call it the meme stocks, but hopefully you're getting the gist here that I'm a pretty big fan of a squeeze, and that's a squeeze. So you have stacked moving averages, green 10x bar, it's got the daily squeeze. So Monday morning, which is that day, we sold the put credit spread with short strikes at 180. So basically placing the bet here that at the very least, GameStop is going to go into next Friday's expiration above 180. Of course, with the squeeze, though, we're looking for a move into about plus 2 to plus 3 ATRs. So yesterday was pretty crazy. The stock was up, 15, 16%. Tried to work an order to buy back that spread for a quick 50% of max profit. Didn't quite get the fill. So this morning, if you look over here at the pre-market, we closed yesterday at 209. Looks like GameStop is going to open up around 230. So what I've done this morning is I canceled the order I had working for GameStop, and we're going to see how that position is looking here this morning. Max profit on this trade is about $2,000. We're up about $750 at yesterday's close. If I can crip mock my way out of here with a good 1,500, you're not going to get any complaints out of me. But it's way too extended at this point. So I do not suggest anybody take a trade here unless we pull all the way back to the 21. But I did want to show you this because even with the goofy meme stocks, I'm thinking in terms of probabilities, and the probabilities begin and end with the structure of the chart. So it can be a Google, it can be a Caterpillar, it can be a freaking GameStop, but if you got a daily squeeze, you have positively stacked moving averages, you're above the 21, well then I'm going to look to take my entry near the 21, and I'm going to look to take entries into plus 2, plus 3. So we'll see how GameStop goes this morning, but that's about it, my friends. I don't think what you don't want to do right now is overwhelm yourself. The most important understanding right now is the overall timing with the squeezes of the index. And then have the understanding, if these squeezes fire long and we get a move into new highs and we get that move into plus 2, plus 3, you're going to see upside momentum everywhere. So you don't need to have a position in Google and Facebook and Caterpillar and this and that. Have 2 to 3 good looking positions and then hold on tight as long as they hold up structure. And should the market fire the squeeze to the upside, you should be in pretty good shape. So that's what I'm thinking for the next week to 2 weeks. We'll see how that Condor goes. Those can be nice weekly income trades. And then thinking forward a little bit. Got the squeeze fires long, we hit plus 2, plus 3. At that point, the move is typically over. And then as far as the next round of opportunities, I'm actually going to be looking for more shorts. So the number one thing I want to short here, and if you're a Tesla fan, it ain't nothing personal, although I would like to short it for the internal combustion engine fans out there. But Tesla, just the structure of this chart right now is a short. All across the board, this is just screaming short, based on the structure, not based on opinion, just the structure of the chart. Got the weekly squeeze here. We're under the weekly 21, so that's a negative. There's no positively stacked moving averages, and the histogram is negative. To me, that's a bearish weekly chart. A bullish weekly chart looks like this. You have positively stacked moving averages, you've got the green 10x bars, and you're above your 21 EMA. So the Qs look beautiful here. That's a bullish weekly chart. Tesla is a bearish weekly chart. So using that mindset of we got to squeeze, once a squeeze fires, we're looking for 2 to 3 plus ATR, up or down. With a weekly chart, minus 2 ATR would bring you down to about 450. So as of right now, that is the move I'm looking for on Tesla. My only gripe here is I want to short it after a bounce, which you're getting a little bit of a bounce here. Ideally, I would like a bounce into 650. The reason I want to bounce into 650, and check out the daily chart. Everything about this just screams short. So I could be dead wrong, and it's just a part of trading, but thinking in terms of probabilities, the weekly squeeze is busted. And then check out the daily chart. Negatively stacked moving averages, red 10x bars. She's looking pretty rough. But the reason I want to bounce into 650 is that's the weekly 21 EMA. And one of two things can happen if you bounce to the 21. Potentially, Tesla bounces back to the weekly 21. It's strong enough. You get a couple closes above the weekly 21. And then Tesla's not looking too much like a short if it regains a little bit of structure. So think over here. We're breaking down a little bit, but ultimately, we're right back at the 21. We're finding support. Tesla's not a good short at that point. So, you give it the bounce in the 650 to let it prove itself. If you're really going to get back on your own 2 feet here, Tesla, well, you should get back to the weekly 21. You should close above the weekly 21, etc. From the standpoint of a short, though, that's the perfect short entry. A little bit of breakdown. Daily chart gets extended. You get one good bounce here to the weekly 21, but if we get rejected, and then we're seeing signs that Tesla's going to roll over again, that's the best time to place that short. And think of my perspective specifically. I like to sell call credit spreads. I don't want to sell call credit spreads after Tesla's been getting its ass handed to it for 2 weeks because the calls are getting destroyed. I want to sell those calls when they're nice and thick and juicy with premium. They're getting beaten down when Tesla's flushing like this. So the benefit of waiting for the bounce into the weekly 21, aside from the fact that it's a key level, is you're going to get a good, nice bounce here that really brings back some big premium to those calls. The 660s, the 680s, the 700 strike calls. If we can keep this bounce going, they're getting some good premium on them. And if we get rejected, I want to go sell those calls to somebody else before we make the next leg to the downside. It's that little bit of timing with the credit spreads. You can quickly collect a good chunk of your max profit. So I do think Tesla's a short, but I got to be a little bit picky here. And then, of course, do we want to be loading up on shorts right now with a squeeze in the SPY? And I don't think we want to. As long as we're holding the structure here, and I'm looking for that move to the upside, that's the path of least resistance. So even if Tesla looks pretty crappy on a weekly chart or a daily chart, the overall market fires up a squeeze here and gets a good week or 2 weeks pushing higher, it's probably going to pull Tesla with it. So always keep that in mind. The direction of the overall market, that's the path of least resistance. And that's what I think you want to spend the majority of your time focusing on. So we'll keep a short on Tesla on the back burner and a few other names. But I think for the time being, you got the squeeze setting up here for the SPY. You got the Qs coming back from the dead, looking a hell of a lot better here. I think we focus on the upside. So if you want some tech, I think Google and Facebook on a pullback. It's got to be on a pullback. I think you can't go wrong there. And if you're looking for something in tech you could jump into now, give a little bit of consideration to Microsoft. I wouldn't give it a 5-star rating. This is a 4-star. Not that bad. And the only benefit here is that you haven't made that push into 2 ATR yet, where Google and Facebook pretty much have. So if you're looking for tech, I think it's Googs or the Book of Face on a pullback, or you take consideration of Microsoft. As far as other sectors out there, the industrials look rock solid still. So I think Caterpillar, Triple M, and UMP, those are good choices as well. But the major mindset you want to have right now is that whether it's an industrial stock, a technology stock, go find that setup where all on its own, that stock has the kind of structure where there's a high probability we're going to make that +2 to +3 move to the upside. You find that kind of structure, but then we take into consideration, we got the same structure to the overall market. And when you can combine those two things, an individual setup that's looking prime to make that move and the overall market looking prime to do the exact same, you're bringing probabilities together, which I'm a huge fan of. So we got a few minutes here before they open, so I'm going to cut y'all loose, but there's the focus list. Keep it nice and simple. Anytime we got to squeeze in the indexes, we're looking for good, clean setups. We're looking to jump in, and we're looking to hold on tight until one of two things happens. Either, preferably, we get the move into +2, +3, or we lose structure and we get to the point where it looks like these squeezes are not going to fire in our direction. But that's about it, my friends. I'll keep you all posted on the Google trade, the Caterpillar trade, GameStop. She should be an interesting one here this morning. Yeah, it just keeps on going here pre-market. So that shall be pretty interesting. But that's that, my friends. So have a good day. Trade safe. We'll be back on Friday morning. And for those of you in the options room, I'll see y'all at 10:30. So I'll see you in a good hour or so. But trade safe. Peace out.